Welcome to Tax Smart Hustlers, where each episode unveils powerful tax strategies and financial wisdom for the go-getters. Hosted by Thrive Tax Solutions, this podcast is a gold mine for small business owners and real estate investors seeking the path to financial freedom. We dive into practical, actionable advice on optimizing taxes and accelerating wealth growth. Join us to become a tax smart hustler.
And welcome to episode 5 of the Tax Smart Hustlers podcast. My name is Aaron Siegel, and I am a tax advisor at Thrive Tax Solutions in Boulder, Colorado. So for today's episode, we're going to talk about something that commonly comes up with S corporation conversions. So when your side hustle is starting to become a main hustle and you're seeing that net income number coming above $40,000, a lot of the influencers and some of the big names out there will always talk about there being the need to make an S corp conversion as soon as you get to $40,000 of net income. And in a lot of ways, it starts to make sense for tax purposes, but there are things that we definitely want to consider before we go and we make the decision to become an S corporation. So that's what we're going to look at today in our episode. So the first is, the big question, is $40,000 net always the answer? And that's usually the biggest thing you can consider, right? Is that really, if something is always or never, there's probably things to explore there. So the first one is an S corporation. You really want to have some careful planning involved with your tax advisor before you make that election. And that's even really more the case when you're doing something with a late S corporation conversion, where you're going and backdating to the first of the calendar year. In particular, it relates to cash flow and payroll. And so it's important to have that conversation to say, what is our cash situation looking like this year? Are we going to be able to get this payroll taken care of? And really, is this the time, or should we wait until early the next year? And the biggest thing we see, with some of these premature conversions, so people that do it themselves or that didn't really look at the total scenario, the total situation that's going on in their business, is they quickly run into cash flow issues relating to payroll and reasonable compensation. So in that, we'll dive into that a little bit deeper. But when you have this requirement to start paying reasonable compensation, that might be biweekly, monthly, quarterly, but there does need to be this mechanism of payroll. So when cash flow is sporadic, sometimes that can really start to be problematic when a young business makes an S corporation election. And the other piece to really just consider is there are additional compliance costs when you migrate into an S corporation. So with that, generally, you're going to see that there's the costs that are going to come with tax preparation and then payroll. And so it takes about $7,500 to $10,000 of net income before you really realize a savings in that particular area. So the first thing to look at is just some basic considerations. So the first one seems obvious, but sometimes it gets missed is your business actually growing consistently? Or is it steady? Or is it starting to be flat or even decline? And what you'll find is, if your business is growing, the election a lot of times makes sense, right? Because you're seeing an increase month over month and it's going to get easier, not harder. Where we start to see some issues is when things are steady and flat, or even if they're starting to decrease. If you make that election at $40,000 and things are staying steady, especially if your operating expenses aren't under control, you start to find issues with cash flow pretty quickly. And so the second question that ties into that, of course, is do you anticipate additional operating expenses or OPEX in the next year to year and a half? Generally, what that's going to end up being is if you're bringing on employees to start to help you, if you're looking at getting into office space or starting to expand maybe the equipment that you have around, you're going to have additional cash outlays that are coming. And if you don't project that out in advance, if you make the conversion at $40,000 net at your current spending, and all of a sudden your spending increases, the next thing you know, again, you've got cash flow issues. And the third one is, are you running a seasonal business? A lot of times if you have something that's seasonal and it's late in the year, all of a sudden you see the income increase in the fourth quarter and you go, oh, it's time. I need to go get an S corporation. What happens is if all of a sudden you drive into a slow season going into first quarter or second quarter, same problem applies. The cash flow isn't stable and it makes it hard to do reasonable compensation. So, the TLDR as far as the slide goes is we really want to be cognizant of the cash position of your business before you make an S corporation election. So if you aren't sure that your cash flow is stable enough to support payroll and these additional expenses that you have when you have an S corporation, it may not be the time to pull the trigger on it. So there's a few things to consider with reasonable compensation. And the biggest thing is IRS rules and regulations really are not specific when it comes to reasonable compensation. So a lot of times you're going to see people come out with things like a payroll matrix, which on its face seems perfectly logical. You take $40,000 a net, you split 50-50, 20,000's payroll, 20,000's distributions, you're done, right? Sometimes it's not that easy, right? And especially if you do end up under examination, which may very well be rare, you're going to have to sit in front of somebody and explain how you came up with the number. So a lot of times just saying, oh, I made a 50-50 split may not be enough. So some of the things just to consider as you decide if you're going to make this election are things like minimum wage laws. So generally they don't apply to a small employer. So if you're working on your own, minimum wage laws may not apply in your state. But if you think from the position of someone who's examining or auditing your reasonable compensation, the odds are they're going to use this as a baseline, right? So depending on your state, the federal minimum wage is $7.25 per hour this year. Goes all the way up to $17 per hour in the District of Columbia, so pretty wide range. But if you take that as a full-time employee, you can give yourself, let's say, a payroll range there of $15,000 to a little over $35,000 in the span of a year. So if you're not able to support a wage that actually is minimum wage in your state, may not, again, come up as, oh, this is a violation of minimum wage laws, but it may come under some scrutiny later on if you're taking distributions and things come into question. The third point here is the federal overtime exempt minimum wage. So if you were working for a larger employer and they were going to say, you're overtime exempt, so you can work all the hours you want, but it's for one flat price, the federal overtime exempt minimum wage this year is $35,568. So again, if you can't pay yourself that, it may not be a violation because you're a small employer. But if it comes under scrutiny again, the argument starts to weaken that if you're paying yourself $20,000 or $15,000, that was enough. Then the last one in particular, we work with a ton of service-based businesses. And what you'll find is highly skilled professionals. So if you're an attorney, you're an engineer, anything along that line, CPAs, accountants, everything else, the skill set that you bring to the table is probably worth more than $15,000 or $20,000 of reasonable compensation. So if you did come under examination and they looked at that, they're going to look at you and say, hey, are you an attorney? Yes. You've gone to school, got your JD. What's your billable rate if you go work for someone else? What are you earning? It's probably not $15 an hour. So it's something to consider, maybe getting into looking at a reasonable compensation report to say, what would actually be reasonable that you could go with a straight face and talk to an examiner and say, yes, this payroll I've taken, it is reasonable compensation. So with that, the IRS actually has a job aid. If you're following on YouTube or you go visit there, the link is here below. But you can also just go search for IRS Reasonable Compensation Job Aid for IRS Valuation Professionals. Long name. But with that, they get in and they break out 3 different ways they teach their analysts to go and actually calculate reasonable compensation. And you've seen this in some tax court cases along the way where they are actively using this to decide what they feel reasonable compensation is. A lot of times this is going to come up when you're actually a higher earner. So the $40,000 net situation we're talking here, maybe it doesn't come up. But as you start to expand, especially if you're a highly skilled professional and you're making solid money in your business, you better believe that somebody's going to challenge a low payroll amount. So with that, there's 3 approaches the IRS teaches their analysts. The first is the cost or many hats approach. And this is generally something you're going to use when you're a smaller business, don't have a lot of employees, and you really are wearing many hats like so many of us entrepreneurs are. So if you're doing all of the shredding and the cleaning and everything else around your office, the way that approach works is it breaks out the tasks that you're doing in your business over the span of your week and your year. So if you're doing 10 hours of administrative work and 20 hours in your core function and maybe, 10 hours of things like taking out the trash or anything else. They're actually going to calculate the hourly wage that it would take to replace all of those tasks. And when they add that together, they're going to come out and say, this is what we feel reasonable compensation is. So generally, for small business owners who are making their S corporation election, that's usually the approach that you would want to consider. And there's services out there like RC Reports, which is awesome, where you can go in and actually plug this in. It's going to spit out a number for you, and they're willing to back it up in case of an audit or examination. Now, the second approach is as you start to scale your business, they're going to go in and say, okay, now you've moved. Maybe you're not doing all of the tasks, but you start to move into a true management role. And so at that point, you would probably switch to what they call the market or industry comparison approach. And with that, it's to say, okay, if you're the CEO of a business and you manage day to day and you have, X number of dollars and this many employees in this industry, what would it cost to go and hire somebody to replace you as the CEO or director or whatever your job title happens to be in your hustle that's now evolved and become a real business? So with that, you tend to see the market approach ends up being higher because the task is more specialized. So rather than looking at, I'm going through and I'm cleaning up the house and everything else, it's going to start to say, okay, you're running a company. What does that cost to replace? Then the third is really the time or the mechanism in which there may be disagreement between the parties, or the IRS calculates something and they think, maybe this primary mechanism, the cost or the market approach, just wasn't the right way to go. And so in cases like that, they go and they revert to this income or this independent investors test. And typically it's a more financially based calculation. It usually makes a lot more sense as a business really starts to scale and ramp up. But they apply financial formulas to the earnings and profitability of a company to determine what they feel that the reasonable compensation would be. And typically they compare that with one of the other two approaches, and that's where it starts to guide the conversations and an examination. So all this being said, it's just reasonable compensation sometimes isn't as easy as just putting a formula on things. Obviously, paying yourself some reasonable compensation is better than not paying reasonable compensation. So the first bar for audit is actually paying yourself something. The second bar is to really sit there and say, okay, what's truly reasonable? And if you're using other strategies, like you're building out your solo 401k and you're paying your health benefits and maybe throw an HSA in the mix, you bring in spouse, all these other things, there's so many other ways where you can start to drive down the effective tax on the payroll that you're paying yourself rather than just shorting the number. So sometimes it can be short-sighted just to say, hey, blanket formula, we're good to go. So things to consider. And then the last whole piece, this one, it's a little bit less of a thing, but you're going to have these additional compliance costs when you form an S corporation. The two big ones are you got to pay yourself payroll. And so if you use any of the payroll providers out there, you're looking at probably $50 a month. So you're running about $600 for the year. And the other one is you're going to have to pay your accountant or your EA for an S corporation tax return. So depending on who you're using, it may be as low as $1,200. It could be a whole lot more than that as things continue to grow. But really, what you're going to say is, okay, I take these compliance costs, and we'll use the $1,800 here as an example. When you compare that against the net income and the FICA tax that would be involved with that to really net out and be a benefit to you, it's going to run between $7,500 and $10,000 of net income that would have been subject to the self-employment or FICA tax before those additional compliance costs really make sense. So on top of whatever your reasonable compensation is, you're probably going to want to add another, call it $7,500, $10,000 on top of that on your net income to make sure, okay, maybe this is time for us to start looking to do this. So you're going to combine all these things together. You want to make sure your cash flow is stable and that you're on a growth trajectory. If the income is questionable or you just don't know how it's going to go yet, that might be one reason to hold off, even though it may make some sense on the initial conversion. The second is to look at that reasonable compensation. So again, all these tests and federal labor laws, they may not apply, but again, you want to be sure whatever's comfortable for you. Don't just trust that you're supposed to use a matrix and then have to be the one who holds the bag and goes and sees an examiner one day. You want to be sure that the number that you're using is something that you are willing to go and fight for. And if you're not in a place where you're able or willing to do that, you need to bring in an expert like RC Reports or someone in that arena to calculate the number and be willing to go and defend you should something come up. Especially if you're continuing to grow and you're getting larger, there will come a day where you're going to end up in a state or a federal examination, and you don't want to be caught with something silly like reasonable compensation just being out of line. There are so many strategies you can put into place to really take care of that and to mitigate some of the payroll tax related implications where, again, it's about being smart, right? We want to save as much as we can as we build out our business, and we want to be smart about how we do it. And then the last one is, again, the compliance cost. So you just don't want to, if you've got additional costs with your attorney or other things that are going to come in with the corporation, you've got to make a wise financial decision. We don't want the tax tail to be wagging the dog in this case. You have to make the right decision for yourself, taking into account all of the different things that apply in the scenario. So again, the caution is this: you're going to hear in so many places, $40,000 is it. You're going to find a lot of advisors who have probably listened to the same podcast and they're going to parrot the same thing to you. But if they don't have a serious conversation with you and walk through these types of questions with you, you probably have the wrong advisor. So again, as you're growing and you're building a business, it's important to have the right people with you. And the right people are going to be the ones who ask you questions and make sure that you're making good decisions for yourself and not just what benefits them. So with that, hopefully you found this useful. When we tie this in with last week, it kind of makes a lot of sense, right? We look at all these other expenses where you have to go through and have an accountable plan and deal with your health insurance and travel reimbursements and all these things. And when you do that and you're subject to I got to pay that back in 60 days in arrears, plus now I got to do payroll and I've got compliance costs, you really need to make sure your cash flow is good, because otherwise you're going to end up in a tax preparer's office or your EA or your CPA and saying, hey, I didn't pay reasonable compensation because the cash flow is messed up. And at that point, it's a lot harder to fix rather than getting it right up front. So take the time, talk to an advisor. It is well worth the time and the investment for yourself. So with that said, let's connect. If you have questions about this, if you want to talk about your S corporation or your side hustle and where it's going, when it might make sense, definitely reach out. We'd love to talk to you. We're on all the social media platforms at Trust Your Taxes. You can email us anytime at hi@taxsmarthustlers.show, or you can visit our website at taxsmarthustlers.show. We want to hear from you. If you like these episodes, let us know. If there are things you want us to talk about, let us know. We are happy to record the episodes that you all want to hear. And we'd love if you would help us out. If you enjoy this podcast, if it's giving you some value, we'd love for you to like, share, give us a 5-star review. This is the early days of the podcast. We're enjoying seeing the numbers increase, and we really do want to get the word out to folks. It is our mission to help people find financial freedom through wise tax decisions, and that's why we're here. So I hope you all have an amazing week. I will see you again next week, and until then, keep on hustling. Bye-bye.
The information provided in this podcast is for educational purposes only and should not be construed as professional tax advice. Consult with a qualified tax advisor for personalized guidance tailored to your specific financial situation.